Good day, my name is Christel from Frans, Klerk, Independent Technical Analyst. Kaya's wanted us to look at EOH. Last year we mentioned time and time again that there is a beautiful cup and handle formation waiting on EOH, and that was confirmed when 6 Rand 86 changed into a support. Conservative target of my cup and handle is first. The length of the handle projected upwards, meaning that target was 9 Rand 24, and that has already been reached. And the full target of my formation is the length of the cup projected upwards from where the confirmation was when that neckline changed into a support, which means the possible target for this formation is 11 Rand 53. Now, what is beautiful that happened on EOH, Kayes, is the fact that higher lows are visible. The share rose, pulled back, and rose again and changed that previous resistance into a support. And that is very optimistic. It tells us that there are buyers that are accumulating in the dips. In other words, as soon as the share pulls back, they buy more. And that is seen as very positive for a share coming from such a low base. Yes, your red line, the 40-week moving average, is still a support, and it's already done that there around 4 Rand. And that was the first bell for long-term investors to say the long-term sentiment towards EOH has now changed to positive. First sign of weakness on EOH will be visible below 7 Rand 52. That's when the warning will be on the table. But the graph looks healthy. I mean, it's coming from such an extremely low base. There's an ample opportunity for upside at the moment on EOH. Sirius, Michael wanted us to look at Sirius. One of the shares that I know, especially the penny stock traders, love to accumulate. But at the moment, Michael, it's extremely overbought. That stochastic indicator is sitting above an 80 and waiting at 85.55. You can see there is a divergence forming at the moment because this high is a little bit lower than that high. And when that blue line crosses through that orange line, it will be confirmation that there is a negative divergence and that the price action might follow suit on this indicator. So at the moment, I hope you've got it already and not trying to buy it at these highest levels. You can see that the share is in a consolidation base. At the moment, let's do it more like a symmetrical triangle by the looks of it. So that upper band, obviously, and that can become a bullish pennant. When that upper band changes into a support, we can assume that it's a continuation pattern and we can see more upside, and that upper band is waiting at 19 Rand 50. And below that lower band, and that is waiting there at 18 Rand 63, we can maybe see more downside again. A beautiful symmetrical triangle that here can either act as a continuation pattern for more upside or a turnaround pattern when that lower band changes into a resistance. More importantly, the record high was on the 14th of December 2020, and that was at 20 Rand. So clearly a strong resistance that Sirius needs to start to change into a support, to also to assume that the momentum to the top can continue. But if I go back even further, Michael, there might also be a cup and handle in the making here, with a massive cup, and then the right handle, and it might also just be a breathing space for more upside. So even if that level of 18 Rand 63 is maybe too tight for you, you can use that neckline waiting at 17.99 as a possible protection level. More importantly than that 40-week waiting at 16.83, possible levels that you can hold, look for. And then maybe you want to even add to the position, then combine that with your stochastic waiting for it to become oversold. But the graph looks strong at the moment, and it will be interesting to see what that symmetrical triangle does, whether it breaks upward for more upside or it changes that lower band into a resistance. Pierre wanted us to look at Invesco, the solar ETF listed on the New York Stock Exchange. It's an Invesco exchange-traded fund for solar products, and the ticker of the share is TAN. Beautiful lamp ball formation, massive risings at the moment, and the big question is, where do I take profit? So that nobody can really decide for you, but there's a couple of things that we consider when we talk about starting to take profit. And the first one is it overbought? Yes, it is. Has it stopped making new highs? Yes, it has. This is a weekly graph, and this is only Thursday morning, and that high waiting at $170.72 is a little bit lower than last week's high of 123.66. So that might be a little bit of a concern, but I don't have a turnaround candle yet. There's no tweezer top or shooting star or evening star formation that tells me that something might be turning around here. So at the moment, you can hold on, assuming that last week's low, waiting at $103, remains in place. We can see time and time again the share made a little bit of a pullback, bounce again, pullback, bounce. So you can see that the share are giving investors opportunity to get in. And maybe this will be another pullback and a rise to higher levels. Combine that with the stochastic, you can see it's remained overbought for a very long time and continue to rise. And that is unfortunately sometimes what happens. No indicator is perfect, but use these support levels of $103 or $97.64 as possible to support levels to accumulate or more, or to start taking profit if you're happy with it. I see there is a window there, Pierre, waiting between $57.69 and $58.70, a gap that remains open. And we know the rule is they always get closed. It can take days, months, weeks, or decades. But at some stage, especially on a weekly graph, that space needs to close up. And we can assume that the momentum to the top is in place as long as that gap remains open. But at some stage, the sellers have to go and close that gap. Darlene wanted us to look at Aspen. Aspen listed on our JSE local exchange. Beautiful rally. It's given investors an opportunity. It rose, pulled back all the way, was nicely oversold. Beautiful dragon fly candle that confirmed optimism, followed by a beautiful bullish engulfing candle. And we can see that the momentum to the top is clearly in place. Now, the resistance of the 7th of September waiting at 146.65, and that resistance waiting at 151.31 in that week of the 24th of August needs to change into a support in order to assume that the momentum to the top will continue. Why do I say that? Because in that week from the 15th of June back to the 19th of October, I continued to see lower highs. Every time the share spiked, there was clear selling pressure to take it even lower. So the share needs to start to rise above these levels in order to assume that the momentum to the top can continue. Yes, for long-term investors, that red line, my 40-week moving average, waiting at 129 Rand 21, has changed into a support that is seen as very, very positive. But now the big question is, can it change those resistances into a support? If you want to chase the momentum, which is never recommended, why? Because the indicator is already overbought, you've already missed this rally, you can remain and chase it as long as 135.36 remains a support, or you can use that 40-week moving average, 129.21. If we go back on Aspen, we can see it's coming from a very low base, had a massive downside. And now the big question is, are we not sitting here with a head and shoulder formation? And that's why I say these resistances needs to change into support, because this can be a possible head and shoulder formation if the share doesn't start to rise above these resistances. But if it does, we can maybe see massive possible cup and handles formations here, confirming if that high of 165.14 starts to change into a support. So it's a wait and see situation at the moment for Aspen to see whether the momentum can continue, whether that 40-week can remain a support. And so at the moment, keep an eye on that 40-week moving average. I don't like all these boopies appearing on Aspen. It might be also a head and shoulder formation in the making. Ken wanted to look at PPE. You said that he referred to it on a monthly graph, and the graph was a concern for him. Ken, at the moment, we are looking at weekly graphs, and I can see why you say that. that candle of the 30th of November is strong profit taking. I mean, massive tail at the top, real body, real red, real body visible. And we can see that support there that is waiting at 80 cents is strong. Because every time the share almost come close to it, they support it. So the strong level of support on the purple group is 80 cents. The share should keep that as support. More importantly, even if I take this, let me rather put in another trend line instead of moving this one, we can see there's also strong support there waiting around 69 cents. So 80 cents, 69 cents, and obviously that 40-week moving average is a critical level that needs to remain a support in order to sustain the momentum to the top. Let's just see, I've got 1, 2 touching points on the 69 cents line, all right? 2 is seen as a temporarily line, and then 3 or more is seen as a strong line. If I move this line a little bit higher, I've got 1, 2, 3, 4 touching points. In other words, 70 cents is a better line. I do not count a touching point when it pierces the line, the shadow, or the real body of the line. I only count them if it touches the real body or the shadow of the line. So there is a stronger line, 70 cents, and then that 40-week, 66 cents, a strong level of support. Obviously, when these highs, especially the one waiting at 95 cents, starts to change into a support again, we can assume that the momentum to the top can continue. But the record high of any share is always that strong, that's that Olympic level that needs to be broken in order to assume that the momentum to the top can continue again. And that is waiting at 1 Rand 20. 1 Rand 20 needs to start a change into a support and remain one in order for us to assume that PPE can continue to rise to higher levels. Don't forget to send through your questions for next week's show. Have a fantastic week. Take care.